Section 1 of the Watergate Report, Volume 3. This is a LibriVox recording. All LibriVox recordings are in the public domain. For more information or to volunteer, please visit LibriVox.org. Final Report of the Senate Select Committee on Presidential Campaign Activities, Volume 3. Chapter 6. The 1972 Presidential Campaign of Senator Hubert H. Humphrey, Part 1. Financial Elements. Preface. The Select Committee was charged with the responsibility to investigate, inter alia, the burglary of the Democratic National Committee. Specific mention was made of this in Senate Resolution 60, and it is common knowledge that the burglary on June 17, 1972, and events which ensued from it, were the precipitant for the creation of the committee. These matters for many months were the center of the focus of the staff's energies. The broader mandate of the committee was set forth in the very first section. It charges the committee with the responsibility to investigate improprieties in the presidential election of 1972. There is no limitation in the resolution to activities by the Republican candidate. As in the case of the investigation into allegations of misconduct by the president's re-election effort, the investigation into allegations of misconduct in the campaigns of a number of Democratic candidates was bipartisan. It should be noted that improprieties in campaign financing were not limited to any particular candidate or party. By fairly and objectively examining campaigns of all candidates, we should be able to see more clearly that the trouble does not lie with any particular party. Rather, it is the process by which we nominate and elect our president that is in need of remedy. Senator Humphrey's campaign for the 1972 presidential election is the subject of this report. Analyses of still other Democratic candidates follow. It should not, therefore, be thought that Senator Humphrey's campaign apparatus has been singled out, or that evidence of improprieties was not found in the others, as discussed elsewhere in this report. Much of this report relates to contributions by dairy producers. This agricultural enterprise looms large among Senator Humphrey's constituency. It is natural and reasonable that he would be interested in their welfare. The dairy producers found him to be a legislator of national stature and influence who was willing to listen to their problems. In fact, Senator Humphrey had been a consistent supporter of this constituency since 1949. The milk producers were willing to provide his campaigns with financial support, and they were not uniformly particular about doing so by means of trusts which were legally established for making political gifts. The desire of the cooperatives to support Senator Humphrey began much earlier than the period covered by this committee's mandate. Financial support was being given to the Humphrey campaign for the presidency in 1968, when their political action trusts were not yet in existence. This report reveals that dairy cooperative corporate funds were funneled to the Humphrey 1972 presidential campaign, to the extent of at least $25,000. An additional $17,225 was given by way of the dairy trusts. The report examines Senator Humphrey's involvement in the pressure placed on the White House to increase the milk support price in March 1971. The report reviews financial mechanisms of the Humphrey campaign prior to April 7, 1972, and questions of propriety in some other large gifts unrelated to the dairy industry. Alleged violations and irregularities occurring after April 7, 1972, have been the subject of treatment and public comment by the General Accounting Office. It is intended that this exposition, which was not meant to be exhaustive, will contribute to the body of facts which must eventually induce the Congress to enact meaningful reform in the financing of federal elections. 1. Corporate contributions to the 1972 presidential campaign of Hubert H. Humphrey by Associated Milk Producers Incorporated, Valentine, Sherman, and Associates matter. A. Summary. The 1972 presidential campaign of Senator Hubert H. Humphrey received services worth $25,000 from Valentine, Sherman, and Associates, VSA, a Minneapolis firm specializing in computerized political services, which were paid for with corporate funds of Associated Milk Producers Incorporated, AMPI. Corporate funds of AMPI were also paid in 1971 to VSA for the benefit of various Democratic parties and Democratic candidates in several states for which VSA performed computer services, and the total amount paid VSA for the benefit of Senator Humphrey and other Democratic candidates and officials was $137,000. While involved officials in those states knew that AMPI was participating in the venture, there is no significant evidence that any of the officials were aware that corporate funds of AMPI paid VSA to support the projects in those states. Although AMPI itself eventually received some computer tapes, they were of no use or value to AMPI and were only provided to AMPI to establish a semblance of propriety. The evidence indicates that the initial contract between AMPI and VSA was drafted by Jack Chestnut, a Minneapolis lawyer, who was Senator Humphrey's campaign manager in his 1970 senatorial race and his 1972 presidential campaign. Furthermore, there is evidence that Chestnut was informed in July 1971 that AMPI corporate funds were being used to pay VSA, and that, at a later time, he notified VSA that a $25,000 payment for the Humphrey campaign account would be made by AMPI. On January 24, 1974, Senator Ervin wrote to Senator Humphrey requesting that he meet with members of the committee staff concerning various allegations concerning the employment of corporate funds by Associated Milk Producers, Inc., and others. Thereafter, on February 7th, Senator Ervin wrote a follow-up letter, which was designed to provide certain specifics respecting the inquiries the committee wishes to make. After referring to the evidence of the payment of corporate funds of AMPI to Valentine Sherman and Associates for the benefit of the Humphrey campaign, Senator Ervin stated, "We feel it necessary for a committee member to speak with you respecting these circumstances." Senator Humphrey responded to both letters on February 20th. Referencing the corporate funds paid to VSA by AMPI, Senator Humphrey said, "Let me say that neither at the time of the alleged transaction nor now do I have any knowledge concerning this particular matter. Because I know nothing about the transaction and have no records in my files relating to it, I see no point in inconveniencing any member of your committee to meet with me." Mr. Chestnut, his campaign manager, after first being interviewed by the committee staff, later refused to testify under oath in executive session on the grounds that his testimony might be self-incriminatory. A request to Senator Humphrey's office for production of records has not been fully met. The Federal Corrupt Practices Act makes unlawful the giving or receipt of corporate contributions to political candidates or committees, or the purchase with corporate funds of services to benefit political candidates or committees. B. Associated Milk Producers Incorporated. Associated Milk Producers Incorporated, AMPI, consists of approximately 40,000 dairy producer members in the southwestern, central, and upper Midwestern states. Its headquarters are located in San Antonio, Texas. Because federal statutes have forbidden the use of corporate assets for political contributions, in 1969 AMPI established a trust to collect monies from participant donors, almost entirely dairy farmer members and AMPI employees, and to make political contributions. This trust was named the Trust for Agricultural Political Education, TAPE. In 1972, it was succeeded by C-TAPE. A more complete description of AMPI and TAPE, as well as of other dairy producers' co-ops, may be found at the beginning of Chapter 5 of the Select Committee Report on the Milk Fund. C. Valentine, Sherman, and Associates. VSA was formed as a partnership in 1969 and was incorporated in 1972. Its two initial partners were Jack Valentine and Norman Sherman. Sherman had been press secretary to Senator Humphrey when he was vice president. For a time, the firm specialized in providing computer services to political candidates who desired to locate voters favorable to their cause and induce them to the polls on Election Day. The 1970 senatorial campaign of Hubert H. Humphrey was one of VSA's first clients. VSA was subsequently employed by Senator Humphrey's 1971-72 presidential campaign. During that campaign, VSA billed the campaign organization for services in the total amount of $270,000. Included within this total were billings amounting to $200,000 for computer services regarding the states of Nebraska, Oregon, Florida, and Maryland. As described in detail herein, $25,000 of this amount was paid by AMPI from corporate funds, and there is evidence that Senator Humphrey's campaign manager was aware of and promoted this payment. D. VSA's initial proposal to AMPI. VSA developed a procedure by which it could capture voter names and inclination and relevant demographic data, which would be useful in the computerization of political mailings and for other political purposes. It decided to market its services in this regard to various Democratic candidates and state parties. VSA hoped that it could persuade AMPI to bear a large part of the cost of such work. So there would be an appearance of a commercially useful product for AMPI, VSA proposed to provide AMPI with computerized lists of rural residents, which supposedly AMPI could use in various commercial programs it might undertake, such as selling insurance. This was, however, a facade. David Parr, consultant to the general manager of AMPI, testified that the documents surrounding the transaction, which referred to commercial uses, were bogus, that AMPI had no real interest in mailing lists, and that the project was purely political. Harold Nelson, a former general manager of AMPI, testified that the primary motive was to help Senator Humphrey in his 1972 presidential campaign. William Connell, executive assistant to Vice President Humphrey from 1965 to 1969, stated it was his idea to stir the interest of organizations such as AMPI in sharing the cost of VSA's political projects. He stated, however, that he thought the AMPI payments would be legal, that is, would come from trusts, such as the Trust for Agricultural Political Education, TAPE, which was an adjunct of AMPI. In January of 1971, Connell sent a letter to Parr stating that Jack Valentine would be in Louisville, Kentucky on January 29th, while Senator Humphrey spoke to a dairy group there, and suggested that Valentine make use of the occasion to present VSA's proposal to Parr. Following the event in Louisville, Mr. and Mrs. Parr, Connell, and Valentine flew to Minneapolis in the company of Senator Humphrey. Either during this flight or while in Louisville, Valentine discussed his proposal with Parr. Valentine's pitch stressed the political benefit to candidates that the AMPI expenditure would bring. However, no agreement was reached at that time. Also, according to Connell, there was no mention then of any benefit for or commitment to the Humphrey campaign. Connell said that, while Senator Humphrey remarked that VSA did good work, he was not involved in the discussion between Valentine and Parr. Valentine, during this initial contact, submitted a written proposal to AMPI. This proposal recites that VSA specialized in the use of computers in politics, and that the end product is the oldest type of politics known. Locate and find your people, and get them registered and to the polls. It explains that Iowa, Kansas, and Nebraska had expressed an interest in VSA's services, but needed financial assistance. Under the heading Benefits to AMPI, the proposal argues that AMPI financing of VSA's services would give AMPI tremendous political leverage. While the proposal contends that AMPI would have superior lists by which to help organize its membership, it notes that all of the proposed states are critical to Democratic victory in 72. E. VSA's arrangements with AMPI regarding services in various states. It appears that, during the ensuing months, arrangements were made by which VSA, with AMPI support, would provide political services to various Democratic officials in the states of Iowa, Kansas, South Dakota, and Oklahoma, which in some instances were available for use in the presidential campaign. An understanding of the arrangements regarding these states is helpful as background to the AMPI contribution made to Senator Humphrey. Connell and Ted Van Dyke, who had also worked in Humphrey's vice presidential office, functioned as agents or finders for VSA with respect to these states. The Select Committee has not established that any of these individuals in these 4 states who contracted for or received the benefits of VSA's work were specifically aware that the payments to VSA by AMPI were made from corporate money. The initiating force behind the Iowa arrangement was Van Dyke. The cost of this project was $60,000, $50,000 of which was to be paid by AMPI. The evidence suggests that the work done in this state was for Iowa Democrats generally. Thus, a letter from Valentine to Clark Rasmussen, a former Iowa State Party chairman, at the Hughes for President headquarters, dated July 13, 1971, indicates that the project would benefit the Iowa Democratic Party and all Democrats. Despite the destination of the letter, there is no evidence that VSA's work was done primarily to service Senator Hughes' 1972 presidential effort. Valentine stated in this letter that a contract was not necessary and that he was proceeding on the basis of the AMPI commitment. VSA billed an Iowa official for $10,000 for this project on July 12, 1971. Van Dyke was also the intermediary for the VSA project in South Dakota for a senatorial campaign. This was to cost $20,000, $7,000 of which would be paid by AMPI. According to Sherman, the campaign personnel were aware of the arrangement with AMPI. As noted, however, there is no evidence they were specifically aware that corporate money would be used in payment. Connell arranged the Oklahoma project, which was performed for the state Democratic Party. AMPI agreed to pay $30,000, which was one-half the expense. VSA retained the rights to the lists prepared for use in the 1972 presidential campaign. The Oklahoma project was begun with the intention of providing service to state candidates. A letter from Valentine to Governor Hall, dated May 14, 1971, expressed appreciation for a previously held meeting and the hope that they could get together with AMPI to get the project started. A Valentine memorandum of July 20, 1971, states that certain state candidates would share in the project and finance it with AMPI. But a VSA proposal to Governor Hall, dated July 21, 1971, suggests that the list provided might be used by other Democratic candidates. The Oklahoma project, however, was halted after the initial data accumulation, and no payments were made to the VSA other than by AMPI. The Kansas project was for the state Democratic Party. Its projected cost was $50,000. AMPI paid $25,000. As in Oklahoma, VSA reserved the right to use the lists created in the upcoming presidential campaign. The project was discontinued after the initial data accumulation due to non-payment by the state party. F. The corporate payments by AMPI. On June 15, 1971, Valentine wrote Parr enclosing an invoice for the Iowa project per instructions from Van Dyke. Valentine stated that if there were any questions about the invoice, Parr should contact Valentine or Van Dyke. In an apparent effort to expedite payment, Valentine called Van Dyke, who assured him that AMPI would pay. Valentine also called Parr. Parr, who said he had talked to Nelson, assured Valentine that VSA would be paid by July 30th. VSA received an AMPI corporate check for $25,000 on July 30th. Out of concern for the corporate nature of the check, Valentine said he called Jack Chestnut for legal advice. According to Valentine, Chestnut said that the check could be retained if AMPI were to receive some computerized lists. Valentine stated that he and Chestnut together then drafted a contract to be signed by VSA and AMPI. The contract indicates that services to be performed by VSA involve the compilation of lists of rural residents to be used by AMPI in its commercial operations. This contract was backdated to June 10, 1971, presumably because the initial invoice was dated June 15, 1971. Valentine signed the contract and sent it to Nelson and Parr by cover letters dated August 2nd and 3rd, respectively. These letters specified that the contract enclosed was drawn by Chestnut. The wording of the contract notwithstanding, Valentine stated that Chestnut and Parr knew the $25,000 he received by corporate check was for political work done in Iowa. After consulting with Chestnut, Valentine deposited the AMPI check August 2nd. Chestnut, when subpoenaed to testify before the committee under oath about his knowledge of the VSA-AMPI relationship, asserted his privilege against self-incrimination and declined to testify. He had previously been interviewed by the committee staff without oath on December 13, 1973. During this interview, Chestnut said he had some recollection that Valentine told him the $25,000 check had been received. Chestnut stated he told Valentine that, If the payment was for legal corporate work, Valentine could accept it. Chestnut said he has no recollection of being asked by VSA to draft any contract in this connection, despite the fact the Chestnut law firm file on VSA contains what appears to be a draft of an agreement between VSA and AMPI relating to the provision of rural names. This draft agreement, however, is substantially different from the June 10th contract. When first observed in the Chestnut law firm VSA file, the draft agreement appeared just underneath an invoice to VSA for July in the amount of $91. The Chestnut calendar relating to services performed contains an entry on July 29, 1971, reflecting preparation of a milk contract for VSA. Nelson indicated in his testimony that Chestnut was aware of the full parameters of the understanding between VSA and AMPI and participated in its establishment. As he testified, "We asked him, Chestnut, to prepare the deal." Parr has no recollection of receiving the August 3rd letter from Valentine enclosing the contract. He said that, while some invoices from VSA may have been routed to him for approval, it was Nelson with whom Valentine mainly dealt. Parr acknowledged that, although VSA proposed to provide AMPI with rural lists, the primary purpose behind the AMPI payments was to reduce the costs to various Democratic Party leaders of political work done by VSA. He conceded that AMPI expected to acquire political influence by paying portions of the costs Democratic officials incurred for VSA's services. During his testimony before the committee in executive session, the following exchange occurred. Hamilton: This contract was backdated to cover the payment of political monies for the work done in Iowa, and to cover the use of corporate money for political work done in other states in the future. Is that fair? Parr: I think that would be right. All payments made by AMPI to VSA, which eventually totaled $137,000, were paid from corporate funds. This figure includes not only payment for work done for Democratic leaders in Iowa, South Dakota, Oklahoma, and Kansas, but also the $25,000 paid by AMPI for VSA services rendered to the Humphrey presidential campaign, discussed below in detail. The following schedule sets out the payments made to VSA by AMPI. July 16, 1971, $25,000. August 25, 1971, $25,000. October 18, 1971, $7,000. November 15, 1971, $27,500. December 21, 1971, $25,500. December 29, 1971, $27,000. Total, $137,000. While certain invoices were contemporaneously submitted to achieve certain of these payments, as discussed below, a wholly new bogus set of invoices and letters reflecting these transactions was prepared by Valentine in 1972. Nelson's initials appear on certain of the VSA invoices, indicating that he approved payment to VSA. When Nelson was asked to explain the necessity for his approval of payment, he said it was to control this sort of political expenditures. He testified further, "I recognize it as being illegal." End of section 1. Section 2 of the Watergate Report, Volume 3. This is a LibriVox recording. All LibriVox recordings are in the public domain. For more information or to volunteer, please visit LibriVox.org. Final Report of the Senate Select Committee on Presidential Campaign Activities, Volume 3. Chapter 6. The 1972 Presidential Campaign of Senator Hubert H. Humphrey, Part 2. G. AMPI contributions to Senator Humphrey's presidential campaign. 1. The $25,000 corporate payment. A fundraiser for Senator Humphrey was held on October 8, 1971, at the Radisson South Hotel in Minneapolis. Parr and Nelson attended this affair. According to Valentine, he met Parr and Nelson at the airport and transported them to the hotel. Valentine arranged this means of getting together with Parr and Nelson so he could impress upon them his need for additional payments. He told them he needed $25,000 for Kansas, $30,000 for Oklahoma, and $25,000 for the Humphrey projects, a total of $80,000. Nelson, Valentine said, gave him assurance of early payment. Nelson said the money would be paid in the same manner as previously, even though the dangers of making the payments with corporate money apparently were discussed. It appears that both Valentine and Nelson wanted to make certain that VSA provided some services directly to AMPI to support the payments. Parr's testimony in executive session provides some corroboration of this account. He recalls that he and Nelson met on 2 occasions with Valentine. According to Parr, one of these occasions was in the fall of 1971, when Parr and Nelson went to a Humphrey fundraiser in Minneapolis. He remembered that Valentine picked them up at the airport and testified that there may have been some conversation about money due. In December 1971, as related by Sherman, Chestnut telephoned him to advise that part of the Humphrey bill would be paid by AMPI. Similarly, Valentine stated that Chestnut informed VSA, probably through Sherman, that AMPI would meet $25,000 of the Humphrey debt to VSA. AMPI paid VSA $25,500 on December 21, 1971, and $27,000 on December 29, 1971. From these payments, VSA credited $25,000 to the Humphrey account. Chestnut, in a staff interview, denied he arranged for AMPI to make this payment for the benefit of the Humphrey campaign, denied informing VSA that the payment would be made, and denied being aware that AMPI money was used to reduce the VSA campaign debt. There is, however, documentary evidence indicating that Chestnut was in fact aware of the AMPI payment for Humphrey to VSA. One such indication is found in a memorandum from Sherman to Chestnut, dated December 27, 1971, which contains partial reports on VSA work in Nebraska, Maryland, Oregon, and Florida. With respect to the first 3 states, Sherman stated that the charge is $125,000, of which $100,000 was to be paid by the first of the year. He then wrote, "You have paid $20,000, and another $25,000 is certain by other arrangements," italics added. The reference to $25,000 by other arrangements appears to refer to the AMPI payment. A VSA invoice to Humphrey for President on December 29, 1971, states that $100,000 is the cost for services in Oregon, Maryland, and Nebraska. However, in the just discussed Sherman to Chestnut memorandum written 2 days earlier, Sherman had stated that the charge for Oregon, Maryland, and Nebraska was $125,000. The reduction of $25,000 most likely reflected the payment from AMPI. A Sherman memorandum to Chestnut, dated January 24, 1972, complained of a lack of payments by the Humphrey campaign. Sherman stated, "It's killing us," and "We are absorbing the overhead costs through our other clients." He noted that $85,000 of the $200,000 due for work in Florida, Oregon, Maryland, and Nebraska had been received, but a later VSA invoice to Humphrey for President, care of Jack Chestnut, dated February 16, 1972, shows that as of January 24th, only $60,000 had been actually paid by the campaign organization to VSA. Again, the $25,000 difference appears to reflect the AMPI payment. These documents strongly suggest that Chestnut was aware of the $25,000 payment from AMPI. It is instructive to note that the last 3 AMPI payments to VSA in November and December of 1971 totaled $80,000. This corresponds precisely to the amount Valentine says he asked Nelson to pay in Minneapolis in October 1971, and to the AMPI commitments for Oklahoma, $30,000, Kansas, $25,000, and Humphrey, $25,000. By adding this $80,000 to the $50,000 for Iowa and the $7,000 for South Dakota, a reconciliation of the total amount paid by AMPI to VSA, $137,000, is achieved. 2. Indications that AMPI officials intended more than $25,000 of the $137,000 to be for Senator Humphrey's benefit. There is certain evidence suggesting that AMPI officials intended more than $25,000 of the amount paid VSA would benefit Senator Humphrey's campaign. In this regard, the testimony and evidence provided by AMPI official Bob A. Lilly must be considered. The evidence Lilly submitted consisted both of testimony and handwritten notes describing the various matters in which he was involved. Lilly's notes inform that on or about July 19, 1971, he was told that Nelson, Parr, Tom Townsend of AMPI, Jack Chestnut, and others had met at Senator Humphrey's home in Waverly, Minnesota. Soon afterwards, Nelson, Parr, and Townsend told Lilly, according to his notes, that AMPI was committed to pay $140,000 to VSA for Humphrey and Congressman Wilbur Mills. The commitment to Humphrey, Lilly understood, was made at the Waverly meeting. Lilly says he was told that money would be spent by AMPI in several states for Senator Humphrey and Congressman Mills in the form of payment for computerized voter lists. Lilly had no knowledge of any arrangement between AMPI and VSA before July 1971. It appears that periodically from July 1971 to January 1972, Lilly had conversations with Nelson, Parr, and Townsend concerning payments made and to be made to VSA. Lilly apparently had some responsibility to ensure that proper amounts were paid, and he made periodic attempts to determine the status of AMPI's obligations. He preserved several pages of notes that he made contemporaneously with these efforts. The notes, written at different times as the obligations matured, contain certain conflicts as to amounts and designations. Lilly's notes indicate that in a conversation with Parr and Nelson, he was at some time told that $137,000 was to go to VSA for the following: Iowa, $50,000, Oklahoma, $30,000, Kansas, $25,000, South Dakota, $7,000, Humphrey, $25,000. Lilly cannot reconcile these designations with his earlier understanding that the entire amount would benefit Humphrey and Mills. Lilly's notes also indicate that, after all payments had been made, he talked with Nelson and told him that $50,000 had been allocated to Humphrey. Nelson's recollections are likewise confused. He remembers the airport ride with Valentine as predating the arrangement between AMPI and VSA. It was his recollection that on this occasion he met Valentine for the first time, and an oral agreement was reached for VSA to do work for AMPI. However, his understanding is that VSA's work was to be for Senator Humphrey's benefit, and that the AMPI payment would reduce the cost of VSA's services to the Humphrey campaign. Valentine told Nelson, "This agreement would make it possible for them to furnish lists to the Humphrey campaign for much less than they otherwise would be able to do it." Nelson said the AMPI commitment to VSA could have been $140,000. He had no firm recollection of the contract signed by Valentine in late July 1971, which was backdated to June 10th, but he thinks it was sent to him pursuant to his meeting with Valentine in Minneapolis. Nelson was aware that corporate funds were used to make payments to VSA in an amount totaling more than $100,000. He was not aware that candidates other than Humphrey were to receive any benefit from the AMPI relationship with VSA. He did know that projects were to be undertaken in 5 or 6 states, but thought they were related to the Humphrey campaign. Valentine's testimony, of course, does not support Nelson's recollection that they met in Minneapolis before the arrangement was made. It appears that Nelson may be mistaken as to the events of the Minneapolis meeting. It is useful to note, however, that at the October 8th meeting, Nelson, for AMPI, pledged $50,000 to Senator Humphrey's presidential campaign. Both Senator Humphrey and Chestnut were present at the meeting. Nelson stated that he may have intended at the time that the money pledged would come from trust funds, and thus be legal money, but that he had not excluded the possibility that corporate money would be used. There is no evidence, however, that such an additional sum was contributed to Senator Humphrey from the corporate sources. As to whether it was intended that AMPI payments to VSA in excess of $25,000 were to be made for Senator Humphrey's benefit, an October 21, 1971 memorandum from Sherman to Chestnut is pertinent. Under the heading Kansas and Oklahoma, this memorandum reads, "We are going to be working in these states, as you know, partially financed by AMPI. Both of these states were contacted several months ago, and to the best of my knowledge never involved HHH. If there is any inclination by these governors to use the information for HHH, I am not aware of it. Even if they were interested, it would not be where you would invest that contribution. My point on this is, 1. When the original commitment was made to Governor Hall and Governor Docking, there was, to the best of my knowledge, no HHH involvement. 2. There is no indication that Hall or Docking have been told that since then. 3. Never, in Valentine's conversation with Dave Parr, was there a suggestion on either side that this was for HHH. I don't know how you can gracefully clear that up, but we have an apparently firm arrangement to be paid by AMPI for a part of those two states plus South Dakota. This document clearly indicates Sherman's belief that AMPI payments to VSA for Kansas and Oklahoma were not for Senator Humphrey's benefit. The memorandum, however, is susceptible of an interpretation that Chestnut felt the AMPI payments for Kansas and Oklahoma were to benefit Senator Humphrey's campaign. Perhaps that the senator would have the use of the VSA lists prepared for those states. Chestnut asserted his Fifth Amendment privilege, and his testimony in this regard is not available. H. The preparation of bogus documentation, the provision of useless lists to AMPI by VSA. The evidence shows that in March 1972, Valentine fabricated a new set of invoices and letters between AMPI and VSA relating to the services described above, along with another contract dated April 29, 1971. Lilly has testified that the creation of this bogus set of documents came at Valentine's initiative. But Valentine states it was Lilly who desired the fabrication to demonstrate the legitimacy of the expenditures to the AMPI comptroller. Valentine states he met with Lilly in December of 1971, at which time Lilly said AMPI had no records to support an agreement between the two firms. Valentine said he was then given AMPI stationery, and that in March 1972, Lilly called for the documentation, saying he was under pressure to get the lists for AMPI and close the deal. Valentine said he would furnish lists worth $137,000. However, according to Valentine, the computer lists finally sent to AMPI contained only 1 million names and were worth only $30,000. Lilly, however, told Valentine that the quantity of names and the value of the lists did not matter, since his only interest was having something to show the comptroller. Valentine created the entire file by having the documents typed by different employees and on different typewriters in his office. On March 23rd, Lilly met with Valentine at the Minneapolis airport, and together they signed the spurious documents. A series of 12 letters was prepared. Lilly states that he received 7 tapes from VSA in February 1972. Lilly did not even check to see if any data was contained on the tapes. He testified that, "I do not know what they represent," and that the names on the tapes were never utilized. Lilly felt that the tapes had no genuine value. The AMPI official in charge of data processing, Robert Isham, testified that he does not know the purpose for which the lists were acquired or any use of them by AMPI. 2. Senator Humphrey's support for legislation favorable to milk producers and other contributions from dairy producer cooperatives. A. Summary. In 1971 and 1972, Senator Humphrey, who had been traditionally supported by milk producers, received $17,225 from dairy producers' trusts for his presidential campaign. These contributions were in addition to $25,000, which went to the benefit of the Humphrey campaign from dairy cooperative corporate assets. On March 25, 1971, the Secretary of Agriculture announced a price support level for milk more favorable to dairy producers than the support announced on March 12, 1971. Heavy congressional pressure was cited by the White House as one factor in the second decision. Senator Humphrey met with AMPI officials, spoke on the Senate floor to urge an increase in the price support of milk, and introduced legislation on March 19, 1971, to mandatorily raise the level. Senator Humphrey has stated that there was no relationship between his receipt of dairy contributions and his support of price increase legislation. There is evidence that, beginning in 1949, Senator Humphrey has consistently supported legislation favorable to the dairy industry. B. Background. This committee has investigated the relationship between the milk producer contributions to the president's campaign and the milk support price increase announced on March 25, 1971. The question at issue is whether or not the increase was granted in return for or in anticipation of contributions. The thrust of the Milk Fund investigation conducted by the Select Committee has been predicated on the thesis that contributions by dairy producers' trusts, TAPE, C-TAPE, Space, and Adept, were made to induce a more favorable decision by the executive branch of government in respect to the level of governmental support for the price of milk, or that such contributions were in fulfillment of a commitment that they would be given in return for a more favorable decision. It was on March 12, 1971, that the Secretary of Agriculture announced that the price of milk for the 1971-1972 marketing year would be supported by the federal government at approximately 80% of parity. In the ensuing weeks, many congressmen and senators sponsored legislation which would have forced the president to raise price supports to a minimum of 85% and even 90% of parity. Support for this mandatory legislation was predominantly Democratic. 125 members of Congress and 29 senators introduced or co-sponsored such legislation. The president met with representatives of the dairy industry on March 23rd, listened to the merits of their case, and on March 25th, the Secretary of Agriculture announced an increase of support to 85% of parity. A white paper, issued by the White House on January 8, 1974, argued that intense congressional pressure, in addition to the economic merits and political considerations, was a factor in the president's decision. Senator Humphrey admittedly was a strong advocate of a price support increase in 1971 and introduced legislation to set the minimum level at 85% of parity. During 1971 and 1972, Senator Humphrey was first an unannounced and later an announced presidential candidate, and the dairy producers, as they had traditionally done, provided substantial support to his presidential campaign. C. Senator Humphrey's action in March 1971. Senator Humphrey, a Democratic candidate for president in 1971-1972, was one of the legislators who supported the dairymen's position. On March 4, 1971, Senator Humphrey made a speech on the floor of the Senate declaring himself in favor of a 90% level of support. He said he contacted the Secretary of Agriculture on this. He reiterated his position on March 9th and 10th and said he was again appealing to the Secretary of Agriculture. S. 1294, which would have mandatorily raised the support for the price of milk to 85% of parity, was introduced by Senator Humphrey on March 19, 1971. George Marin, then consultant to AMPI, met with congressmen and senators, including Humphrey, to discuss the need for a price increase. According to Marin, the object was to put pressure on the administration. Senator Humphrey met with David Parr, assistant to the general manager of AMPI, on February 23, 1971. Although Senator Humphrey's office provided copies of certain daily schedules for the senator, a committee request of April 17, 1974, for other documents relating to this section has not been honored. D. Contributions by dairy trusts to Senator Humphrey. Senator Humphrey was given $17,225 by dairy trusts in 1971 and 1972. This consisted of $5,125 in 1971 and $12,100 in 1972. $12,500 of these amounts was given by TAPE and C-TAPE, adjuncts of AMPI. In addition, the Humphrey campaign in 1971 received $25,000 in corporate contributions from Associated Milk Producers Incorporated by payment of bills of Valentine Sherman and Associates, as detailed in another section of this report. In all, then, Senator Humphrey's campaign received over $40,000 from dairy cooperatives in 1971 and 1972. 3. Large individual contributions to the Humphrey campaign before April 7, 1972. A. Summary. Until April 7, 1972, it was illegal under federal law for anyone, with certain possible exceptions discussed below, to give more than $5,000 in any calendar year to a presidential candidate, or to any national-level campaign committees operating in his behalf. More than $500,000 was contributed to the Humphrey presidential campaign in 1971 and in 1972 up to April 7th in the form of individual donations in excess of $5,000. These donations were not subdivided among multiple committees. The evidence shows that three types of entities operated as pre-April 7, 1972 campaign committees in the Humphrey presidential campaign for the receipt of individual campaign contributions in excess of $5,000. These three types of entities were: 1. A partnership. Jackson and Company, a limited partnership, received 4 individual contributions of stock, each of which was $86,000 or more, and sold the stock, distributing the proceeds to backers for Humphrey, a presidential committee. 2. Formal Humphrey campaign committees. Backers for Humphrey, the principal pre-April 7, 1972 Humphrey Presidential Campaign Committee, received a number of individual contributions of money in excess of $5,000 each. Backers for Humphrey was also the recipient of the proceeds from the 4 sales of stock by Jackson and Company, which alone exceeded $360,000. In addition, other Humphrey campaign committees operating on behalf of his presidential campaign received contributions in excess of $5,000, including Volunteers for Humphrey and Humphrey for Senator Committee, which were used in 1971 and early 1972 for Humphrey's presidential campaign. 3. A trust account. A trust account maintained by the incorporated law firm of Humphrey's campaign manager, Jack Chestnut, received a contribution in excess of $5,000, a purported personal loan of $100,000 from Paul Thatcher, treasurer of Backers for Humphrey. Aside from Thatcher, the major sources of the donated funds discussed above were a group of 3 individuals, including Dwayne Andres, a Minnesota businessman, and a blind trust operated for the benefit of Senator Humphrey by its trustee, Andres. Months of delay were encountered in obtaining production of records from Minneapolis banks. Humphrey campaign financial records predating April 7th were destroyed by Chestnut, and Chestnut has invoked the Fifth Amendment privilege against self-incrimination when subpoenaed to testify under oath. Under circumstances described in Section 1 above, Senator Humphrey declined a request to be interviewed. A request for documents from his office has not been fully met. B. Introduction. Until April 7, 1972, it was a felonious violation of federal law for any person to make a political contribution in excess of $5,000 during any calendar year to a presidential candidate or to any national campaign committees operating on his behalf. 18 U.S.C. 608. This law, which is not known to have been the basis for any criminal prosecution, was repealed by Section 203 of the Federal Election Campaign Act of 1971. Public Law 92-225. However, its applicability before April 7, 1972, during 1971, and the early months of 1972, was one reason why some of the presidential candidates engaged in the practice of constituting multiple committees. By having a host of such committees available for the receipt of contributions, a wealthy donor could divide a large contribution into $5,000 increments to each of such committees, and thus avoid the applicability of Section 608. Another consideration, of course, was the gift tax law, which requires the payment of a tax on any donation to a political committee in excess of $3,000. Because of the joint applicability of Section 608 and the gift tax law, donors customarily subdivided their contributions into $2,500 allotments, together with a $2,500 donation from a spouse. C. Background. The presidential campaign of Senator George McGovern and the Finance Committee to re-elect the president each eventually constituted hundreds of committees to circumvent the provisions of these laws. Indeed, it was Section 608 which initially caused such intense concern and difficulty for the Committee to re-elect the President, CRP, and the Associated Milk Producers Incorporated, AMPI, in managing the dairy producers' contributions to CRP. The $100,000 which AMPI gave to Herbert Kalmbach in 1969, apparently for the benefit of the president's re-election, was belatedly recognized as being in violation of Section 608. Because of a desire for secrecy, the officials of AMPI contrived an elaborate system of repaying the $100,000, which had been taken from their Political Action Trust. An official of AMPI made a personal bank loan to repay the sum, then repaid the loan with funds he had obtained from AMPI attorneys and consultants, who appear to have obtained reimbursement by increasing their billings to AMPI. Still later, the AMPI Political Action Trusts, TAPE and CTAPE, were confronted with the need for a greater number of committees functioning on behalf of the re-election effort for President Nixon, and the re-election campaign officials encountered many difficulties in constituting enough committees to receive subdivided contributions. The Humphrey campaign officials did not make the effort to create numerous committees. An examination of bank records has revealed evidence and led to other documentary disclosures which show that several donors to the Humphrey presidential campaign made very large contributions to but one campaign entity, seemingly 1. In disregard of the strictures of Section 608, 2. In ignorance of Section 608, or 3. With some understanding that their contribution consisted an exception. Well over $500,000 was infused into the Humphrey campaign shortly before April 7, 1972, in the form of individual contributions in excess of $5,000. Senator Humphrey also utilized assets from a blind trust, which he had created in 1965, to provide two separate sums of $23,000 and about $86,000 of his own money to his own campaign in January and February of 1972. As of April 7, 1972, it became unlawful for a presidential candidate to use personal funds in excess of $50,000. Prior to that time, the only limitation on contributions was found in Section 608. There have been no prosecutions under this section with respect to a candidate's contributions or to expenditures for his own campaign, and the committee knows of no construction of the section applying it to a candidate's use of his own funds. D. The Humphrey Presidential Campaign takes form. Humphrey Volunteer Committee. Friends of Humphrey Committee. A formal announcement of presidential candidacy was not made by Senator Humphrey until January 10, 1972. Activity in contemplation of a presidential campaign had begun by Senator Humphrey and by others on his behalf in 1971, and his interest in the presidency was widely reported. For example, in the fall of 1971, a selected number of persons were invited to meet in Minneapolis with Senator Humphrey and his top campaign personnel. At this function, many of these individuals committed themselves to a certain level of contribution to the senator in the event he announced his candidacy. Officials of AMPI stated at that time their organization would be committed to the extent of $50,000. During 1971, some bank accounts were opened in Minnesota by the Humphrey Campaign Organization, and although they did not bear a title to readily reflect their relationship to a presidential campaign, Humphrey Volunteer Committee, Friends of Humphrey Committee, checks were drawn on these accounts to pay presidential campaign expenses. These accounts were closed just prior to April 7, 1972. E. Humphrey for Senator Committee. Continued use. The Humphrey for Senator Committee, which had been utilized for Senator Humphrey's senatorial campaign in 1970, was continued as an active account by the Humphrey Organization into 1972. It was used to pay presidential campaign expenses. $50,000 was deposited to it as late as February 28, 1972, and it was closed on April 10, 1972, 3 days after the effective date of the Federal Election Campaign Act of 1971. S. Harrison Dagol, a financial backer of Senator Humphrey, wrote 3 checks which were deposited to the committee's account in the total amount of $85,000, $10,000 on May 21, 1971, $25,000 on July 26, 1971, and $50,000 on February 28, 1972, although the July 26 check was payable to Volunteers for Humphrey. End of Section 2. Section 3 of the Watergate Report, Volume 3. This is a LibriVox recording. All LibriVox recordings are in the public domain. For more information or to volunteer, please visit LibriVox.org. Final Report of the Senate Select Committee on Presidential Campaign Activities, Volume 3. Chapter 6. The 1972 Presidential Campaign of Senator Hubert H. Humphrey, Part 3. F. Use of the Chestnut Law Firm Trust Account. Presidential campaign expenses were also paid by checks written on the Minnesota bank account of a trust maintained by the incorporated law firm of Humphrey's campaign manager, Jack Chestnut. For example, trust account funds were used to make a $25,000 payment to Valentine Sherman Associates for computer work for the Humphrey presidential campaign. These expenditures were funded in January of 1972 by a $100,000 check deposited to the Chestnut Trust account and drawn on the personal checking account of the Humphrey Organization treasurer, Paul Thatcher. Chestnut then paid presidential campaign expenses by drawing checks on this law firm trust account. A few weeks later, on January 31, 1972, the Chestnut Trust account issued a check for $100,000 to Thatcher individually, apparently in repayment of what appears to have been a $100,000 loan to the campaign. G. Backers of Humphrey Committee, Jackson and Company. The Chestnut Law Firm Trust account was enabled to make this repayment to Thatcher because of the receipt of a $100,000 check on the same day, January 31, 1972, from Backers of Humphrey, a Humphrey campaign committee which had just been constituted that month, and which appears to have been a major pre-April 7, 1972 committee. Backers was organized in Minnesota. Its officers and candidate were from Minnesota, and it banked in Minnesota. However, it supported a candidate for national office. Its officers, Chestnut and Thatcher, were the national campaign officers, and it both received contributions from outside the state and expended money outside the state for national campaign purposes. It had a maximum bank balance of $101,000, total deposits of $674,063, and was closed on April 12, 1972. It was undoubtedly the committee which received the greatest infusion of funds before April 7, 1972. $471,725 of the receipts of Backers of Humphrey were transferred from Jackson and Company, a partnership established by the campaign primarily to process the sale of stock contributions. H. Archer Daniels Midland shares contributed, the Humphrey Blind Trust. The predominant portion of funds transferred to Backers of Humphrey from Jackson and Company came from the sale of shares in Archer Daniels Midland Company, ADM, the firm headed by Dwayne Andres. These shares were aggregated from the donation of Dwayne Andres, Sandra A. McMurtry, Andres' daughter, Doris Hastings, an Andres friend in Florida, and the Humphrey Blind Trust, created in 1965 and for which Andres served as trustee. The total number of shares thus contributed to Jackson and Company in December of 1971 was 10,500, 3,000 shares from McMurtry and 2,500 shares from each of the others. The stock was sold between January 17th and 24th, 1972, at around $35 per share, to produce a total net receipt of $362,046.30. Thus, Andres and Hastings each donated about $86,000, McMurtry about $104,000, and Senator Humphrey's Blind Trust about $86,000. In 3 installments, $150,000 on January 31, 1972, $40,000 on February 4, 1972, and $166,800 on February 10, 1972, Jackson and Company transferred $356,800 to Backers of Humphrey. Soon thereafter, Backers transferred $80,000 to a Humphrey for President account in the National Bank of Washington, D.C., $50,000 on January 31, 1972, and $30,000 on February 16, 1972. At least to this extent, Backers of Humphrey appears to have been serving as a conduit for the Washington, D.C. committee. The Humphrey Blind Trust transferred an additional $23,000 to the Humphrey campaign in February of 1972. This sum came from funds on deposit in a savings account of Inter-Atta and Company, a limited partnership acting as nominee or agent for the trust. At the direction of Duane Andres, Inter-Atta and Company issued its check for $23,000 to backers of Humphrey on February 15, 1972. 1. Affidavits of Andres, Hastings, McMurtry. Andres, Hastings, and McMurtry have submitted affidavits concerning their individual contributions, and Andres has submitted an affidavit in his capacity as trustee for Senator Humphrey. The individuals' affidavits are in virtually identical language. They each state that the affiant donated Archer Daniels Midland stock to the Humphrey campaign in December of 1971, and that it was delivered to Jackson and Company as agent for the purpose of converting it to cash and distributing the proceeds as directed by various Humphrey committees. The affidavits recite that the ADM stock was contributed voluntarily, was a part of the affiant's personal estate, and that the affiants did not act in the name of or as conduits for any other party. The affidavits of Hastings, McMurtry, and Andres, as an individual, do not deal with such questions as how the ADM stock was acquired by Hastings and McMurtry, how they came to make virtually identical, substantial, and almost simultaneous contributions, the role of Archer Daniels Midland in these events, or the role of Andres with respect to the Hastings and McMurtry contributions, to whom or which committee they understood the contribution would go, whether Section 608 or gift tax laws were considered, and if so, how. Andres' affidavit, as trustee for Senator Humphrey, avers that the trust was established by Senator Humphrey and was funded by his personal assets in which no other person had any interest. Continuing, he states that in December of 1971, Senator Humphrey requested that appropriate distributions be made from the assets of the trust for the benefit of his campaign. So Andres delivered 2,500 shares of ADM stock to Jackson and Company as agent for the purpose of converting the stock to cash and distributing the proceeds to various Humphrey committees. Andres states that the stock was part of the trust's assets and that he did not act in the name of any party except as trustee for Senator Humphrey. In February of 1972, again as trustee for Humphrey, Andres distributed $23,000 to the Humphrey campaign from funds on deposit in a savings account in the name of Inter-Atta and Company, acting as nominee or agent for the trust. Andres avers that the $23,000 was part of the trust's assets and the property of Senator Humphrey by virtue of his beneficial interest in the trust. In response to a committee request for data concerning additions to the trust of Senator Humphrey during 1971 and 1972, Senator Humphrey's attorney provided affidavits from accountants who have reviewed relevant financial records, which showed that the only additions to the trust came from Senator Humphrey's own funds. As previously noted, Senator Humphrey, or his trustee, appears to have paid gift tax on these political contributions. Senator Humphrey's attorney has advised the committee that the gift tax was paid out of an abundance of caution. As to the relevance of Section 608, that statute has never been construed by the courts, and, in any event, the committee is aware of no authority that it has any applicability to a candidate's contribution to, or expenditure for, his own campaign. J. Chestnut interviews. When subpoenaed to testify under oath on April 11, 1974, Humphrey's campaign manager, Jack Chestnut, invoked his Fifth Amendment privilege against self-incrimination and refused to testify. When he had been interviewed without oath on October 18, 1973, before most of the above information was developed by this committee, he said he had no knowledge of any donors who desired anonymity, nor of any contribution of $1,000 or more by a third party so as to protect the identity of the true donor. He stated then that the Humphrey campaign public disclosure of contributors did not withhold the identity of any persons who had asked for anonymity. Chestnut told the committee staff he could not be sure of the identity of any Minneapolis bank depositories for the Humphrey campaign. In fact, he had been an authorized signator on the Minneapolis bank accounts of the Bankers of Humphrey Committee, Humphrey Volunteer Committee, Friends of Humphrey Committee, Telephone Account, and Humphrey for Senator Committee, as well as the treasurer for this last committee. and he made no mention of the use of his own law firm trust account as campaign depository. K. Investigative delays. The documentary evidence concerning the large contributors to the Humphrey campaign in early 1972 was pieced together from an examination of the records of numerous bank accounts, uncovered as a result of a staff examination of the records of Valentine Sherman Associates, a Minneapolis firm specializing in computer services for political campaigns. The firm had received corporate contributions for the benefit of the Humphrey campaign account. This discovery of the bank accounts and the acquisition of records was not accomplished until well into 1974. Many delays were encountered in production of records in compliance with subpoenas. After tentative agreement in conference with the Donors' Council, he took more than 4 weeks to furnish the identities of Andres, Hastings, and McMurtry, along with their affidavits. Chestnut's refusal to testify under oath when subpoenaed on April 11, 1974, prevented the staff from obtaining a full explanation of the campaign's solicitation and handling of these donations. As explained in Section 1 above, in response to a committee request, Senator Humphrey declined to meet with a member of the committee for interview. A committee letter to Senator Humphrey's administrative assistant, dated April 17, 1974, asked for the production of various categories of documents, one of which was communications with Jack Chestnut, Paul Thatcher, and Dwayne Andres in regard to the presidential campaign. This letter was answered on May 23rd, but certain documents requested have still not been produced. L. Destruction of financial records. Virtually all of the Humphrey campaign pre-April 7th financial records were destroyed by Chestnut in the summer of 1972. There was no legal obligation to retain campaign financial records under the law existing before April 7, 1972. However, such wholesale destruction necessarily raises a question of motive and propriety, as expanded upon by Chairman Ervin in exchange with Maurice Stans. Senator Ervin: in other words, you decided that the right of the contributors to have their contributions concealed was superior to the right of the American citizens to know who was making contributions to influence the election of the President of the United States. Mr. Stans: we did not evaluate it in those terms. We evaluated it in the terms that it was the Congress of the United States in 1925 that gave the option to a contributor to remain anonymous, and that we had no right to give away his anonymity. Senator Ervin: well, Mr. Stans, do you not think that men who have been honored by the American people, as you have, ought to have their course of action guided by ethical principles which are superior to the minimum requirements of the criminal laws? Mr. Stans: I do not have any quarrel with that, but there is an ethical question in whether or not I can take your money as a contributor with an understanding on your part that you are entitled to privacy in that contribution, and then go around and release the figure to the public. Senator Ervin: well, all the law said, as you construe it, as your counsel construed it, was that you did not have to make a public reporting of these contributions. The law did not require you to destroy the records of those contributions, did it? Mr. Stans: Mr. Chairman, the law did not even go that far. The law did not even require us to keep any records during that period of time on the advice of my attorney. Senator Ervin: but the law did require you to destroy the records you did keep? Mr. Stans: no, of course not. That would be a silly proposition. Senator Ervin: well, do you think that men who exercise great political power, as you exercised it, and as a former Attorney General of the United States was exercising it, and as other people engaged in this committee work, that they ought to disregard ethical principles and say they have fulfilled their full duty to the American people as long as they keep on the windy side of the law? Mr. Stans: Senator, I haven't said that, and I would not say it. I am saying that I think we have to balance one ethical principle against another, the right of privacy of an individual as against the right of the public to know. The Congress has recognized that there is a problem. That is why it passed a new law. There is no reason that I know of why we should have anticipated the date that law was effective. The Congress, Mr. Chairman, gave us 60 days after the law was effective to operate under the old law. M. Perspective and Disposition. The desire of wealthy political contributors to remain anonymous has long been recognized as reasonable and justifiable. However, the public right to know has been gaining ascendancy over the individual's right to privacy in this respect. A statutory limitation on the amount of an individual contribution, as well as on a candidate's use of personal funds, and stringent reporting requirements undoubtedly have value in reducing the potential for subtle and surreptitious abuses. On April 11, 1974, the United States Senate passed and sent to the House of Representatives S. 3044, an act known as the Federal Election Campaign Act Amendments of 1974. By continuing, in effect, the $50,000 limitation on the use of a presidential candidate's personal funds, which first became effective on April 7, 1972, S. 3044 expresses the judgment of the Senate that the use of personal funds in greater amounts might provide a breeding ground for abuse. Moreover, this new act will require any loan or advance from a candidate's personal funds to be evidenced by a written instrument fully disclosing the terms and conditions. While the Federal Election Campaign Act of 1971, which became effective April 7, 1972, did not include any limitation on the amount which could be given to a candidate's campaign, other than from the candidate's own funds, and earlier statutes had no effective limitations at all, Section 304 of S. 3044 will prohibit contributions to a campaign in excess of $3,000. It will also be a violation for a candidate to knowingly accept a contribution which, when added to the sum of all other contributions from that donor, exceeds $3,000. Again, the Senate has thus expressed a collective judgment that these limitations will serve some useful purpose in eliminating various kinds of abuses which can be inherent in a candidate's acceptance of larger contributions from any one individual. End of Section 3. Section 4 of the Watergate Report, Volume 3. This is a LibriVox recording. All LibriVox recordings are in the public domain. For more information or to volunteer, please visit LibriVox.org. Final Report of the Senate Select Committee on Presidential Campaign Activities, Volume 3. Chapter 6. The 1972 Presidential Campaign of Senator Hubert H. Humphrey, Part 4. 4. Contribution from Minnesota Mining and Manufacturing Company. A. Summary. Minnesota Mining and Manufacturing Company, 3M, maintained a secret cash fund for making political contributions, one source of which was a European consultant who billed 3M for services not rendered. The consultant, by previous arrangement initiated by top executives of 3M, then remitted to 3M his receipts from these billings. In February of 1972, a Humphrey fundraiser solicited a contribution from an official of 3M. The decision to provide financial assistance was deferred until April of 1972, when 10 3M officers each bought a $100 ticket to a Humphrey fundraising affair. The 10 individuals were subsequently reimbursed from 3M's secret fund. B. The contribution. For many years, the executives of Minnesota Mining and Manufacturing Company maintained a fund for making political contributions. Mr. Harry Heltzer became chairman and chief executive officer of 3M in 1970. At about that time, he became aware of the existence of this fund, although he did not learn precisely the mechanics of how corporate money was channeled to it. Wilbur Bennett, director of civic affairs for 3M, explained that an agreement was reached with a European consultant, whereby the consultant would submit false invoices to 3M for services when actually no services had been rendered. The consultant was paid by 3M, and the item was accounted for as an ordinary business expense. The consultant returned the payments to 3M in the form of cash, which was kept under the control of 3M executives. Specifically, it was maintained in the custody of Mr. Irwin Hansen, 3M's Director of Finance. The established procedure for release of contributions from this fund was that the chief executive officer would give his authorization on contributions recommended to him, and this would be presented to Hansen, who would then provide the authorized amount of cash. In February of 1972, The Humphrey for President campaign solicited a contribution from Jerome Schaller, the manager of governmental relations in 3M's Washington, D.C. office, for a fundraising dinner to be held in Florida. However, in a letter to Patrick J. O'Connor, a Humphrey fundraiser, dated February 24, 1972, Schaller declined the request, stating that his 3M colleagues felt that a similar affair on behalf of Senator Humphrey would be held soon in Minnesota, and that they expected to be asked to contribute substantially at that time. An informal $100 per person affair for Senator Humphrey was scheduled at the Radisson South in Minnesota on April 13, 1972. Thereupon, Schaller wrote a memorandum to D.O. Opstad and W.M. Bennett, dated March 16, 1972, to suggest that 10 people in 3M contribute to the dinner. Schaller further advised that the price makes the donation non-reportable. Opstad referred the memorandum to Mr. Bennett with a notation that Humphrey seems to be well financed, but we may find it politic to support the Minneapolis affair. Mr. Heltzer told the committee during interview that, although he does not recall seeing the March 16, 1972 memorandum from Schaller, he does recall that Bennett informed him orally of the memorandum. Upon approval of the contribution, Schaller wrote a memorandum to Opstad and Bennett dated April 7, 1972, to advise that the checks for the Humphrey fundraising dinner were to be made out to the Humphrey Dinner Committee. Bennett subsequently collected $100 checks from 10 different 3M corporate officers, each of whom attended the dinner and was reimbursed for the expenditure in cash from the secret fund in Hanson's custody. The contributors had the understanding that the money had come from a company executive fund. Bennett does not remember the names of the individuals who made the $100 contributions. However, he is certain that he, Heltzer, and Schaller were not among the 10. Bennett is uncertain in his recollection of the delivery of the $1,000 to the Humphrey Dinner Committee. Bennett indicated to the committee during interview that the 10 $100 checks were given to an individual whose identity Bennett does not remember, who was handling the tickets for the Humphrey fundraising dinner. Bennett gave the committee no indication that anyone in the Humphrey campaign was aware of the corporate source of this contribution. On October 17, 1973, the 3M Corporation and Mr. Heltzer entered pleas of guilty to misdemeanor violations of the Federal Corrupt Practices Act, relating to the making of similar contributions to FCRP. The basis of the charge was contributions which had been made from the secret corporate fund to the Committee to Re-elect the President. The corporation was fined $3,000 and Heltzer was fined $500. 5. Contribution of $50,000 by John L. Loeb, Sr. A. Summary. In May of 1972, in an effort to generate additional funds for the California primary, Senator Hubert H. Humphrey met in New York City with Mr. John L. Loeb, Sr., senior partner of Loeb, Rhodes & Company, investment brokers. Senator Humphrey personally solicited a contribution from Loeb, and Loeb agreed to give $50,000. Senator Humphrey's campaign manager, Jack L. Chestnut, spoke with Loeb to explain the financial condition of the campaign, and according to Loeb's attorneys, they discussed mechanics of the contributions. On the following day, Chestnut called Loeb's secretary, Arthur Griffiths, to give him a list of committees for the contributions. Pursuant to a conference with Loeb, Griffiths then asked some office employees of Loeb, Rhodes & Company if they were willing to contribute to Humphrey and to be reimbursed for such by Loeb. 7 persons each wrote 2 personal checks in the amount of $3,000 each, and 1 person wrote a check in the amount of $6,000, all payable to Humphrey campaign committees, for a total of $48,000. Griffiths transferred corresponding amounts from Loeb's account to the bank accounts of each of these persons, and in addition, Loeb added $2,000 in cash to make a total package of $50,000. This was handed to C. Bruce Solomonson, Senator Humphrey's son-in-law, who delivered it to the Humphrey campaign comptroller, Paul Thatcher. The next Humphrey campaign committee report to the General Accounting Office on May 24, 1972, listed these contributions as being made by the respective payers on the checks, but the $2,000 in cash was not reported until June 10th, after the transaction had been called into question by GAO. After some reports by the news media and inquiry by GAO, letters were sent by Mr. and Mrs. Loeb to each of the recipient campaign committees, advising that the Loebs were the true donors. Thatcher then notified GAO that the committee report should be amended to show Mr. and Mrs. Loeb as the true donors, each in the amount of $24,000. On April 7, 1972, a new federal election law had become effective, making it illegal for any person to make a contribution in the name of another, or to accept a contribution by one person in the name of another. On May 31, 1973, Mr. Loeb entered a plea of nolo contendere to violations of this election law, Section 440 of Title II, United States Code, and was fined $1,000 on each of 3 counts. B. Senator Humphrey meets with Loeb, the solicitation. On May 10, 1972, Senator Humphrey met with Mr. John L. Loeb, Sr. in New York City for the purpose of soliciting financial assistance for the senator's presidential campaign. According to Paul Thatcher, the campaign comptroller, several days before the meeting, someone on the campaign finance committee suggested to him that he set up a meeting between Humphrey and Loeb, who had been a supporter of Humphrey for many years. Thatcher said he called Loeb and spoke directly with him to make the appointment. Since Senator Humphrey's schedule anticipated that he would be in New York City on May 10th, the meeting was fixed for that time. Although, as discussed in Section 1 above, Senator Humphrey declined to be interviewed when requested by the Select Committee, the staff had access to a report of an interview with him by the FBI on May 17, 1973. Contrary to Thatcher's account, the senator advised the FBI that he contacted John Loeb, asked him to meet him in New York City, fixed the day for May 10th, and then met with Loeb on that date in the Waldorf Astoria. Senator Humphrey spoke with Loeb alone and told Loeb he would be grateful for financial assistance. Loeb said he would be of help, but, according to Senator Humphrey, no details were mentioned. It was understood that Jack L. Chestnut, Senator Humphrey's campaign manager, would talk with Loeb. In an unsworn staff interview on October 18, 1973, Chestnut stated that he was in the company of Senator Humphrey with several other persons in New York City on May 10, 1972. The group was in New York City for campaign purposes. Senator Humphrey told Chestnut that they would meet with Loeb. The group, which included C. Bruce Solomonson, Senator Humphrey's son-in-law, and Max Kampelman, a Humphrey campaign advisor, went to a hotel suite which Chestnut thought was Mr. Andres, where Senator Humphrey talked with Loeb. According to Chestnut, he and Solomonson were in a different room when Humphrey talked with Loeb, after which Senator Humphrey called on him to explain the financial condition of the campaign to Loeb. Chestnut told Loeb an immediate donation was needed, whereupon Loeb said he would arrange for $50,000 to be picked up tomorrow. Although Chestnut said there was no discussion of how the $50,000 would be accumulated, Loeb's attorneys aver that Senator Humphrey suggested Loeb speak with Chestnut with respect to the mechanics of the contributions to be made, and that Mr. Loeb did so. Furthermore, at the time of Loeb's sentencing, his attorneys complained to the court that at Loeb's meeting with Senator Humphrey and Chestnut, no one called the existence of Section 440 to Mr. Loeb's attention, or raised any question as to the procedure which Mr. Loeb used. An FBI report of an interview with Loeb on May 8, 1973, reflects that Loeb said that in meeting with Senator Humphrey on May 10, 1972, he agreed to be responsible for a $50,000 contribution to assist Humphrey in the California primary. Loeb said he desired anonymity because he did not want to be known publicly as a wealthy donor. Although Chestnut and Kampelman were in the Waldorf Astoria suite at the time of Loeb's conversation with Humphrey, they were not privy to the conversation. When Loeb asked Humphrey, "How shall I go about this?" Humphrey said the matter should be discussed with Chestnut. Loeb then asked Chestnut to contact his secretary, Arthur Griffiths. Soon after the meeting, Chestnut notified Thatcher that Loeb would give $50,000, which should be picked up the next day in Loeb's office. C. Assembling the contribution. The next day, May 11th, Loeb asked Griffiths to find some office employees who would be willing to make a contribution to Humphrey. Loeb said the device of making his contributions through employee intermediaries was his own idea. Also during this day, Chestnut called Griffiths and told him Loeb suggested he call and that Griffiths should make arrangements for $50,000 to be given to Humphrey. Chestnut gave Griffiths a list of the committees to receive the contributions, and the two discussed the sum to be given by each contributor. Griffiths contacted various persons to inquire if they were willing to contribute to Humphrey, and indicated to them that they would be reimbursed. Several persons expressed a disinclination to contribute. Griffiths accumulated 14 checks for $3,000 each, and one check for $6,000, for a total of $48,000 from 8 individuals. $2,000 in cash was added by Mr. Loeb to make a grand total of $50,000. Griffiths arranged for the transfer of funds from Loeb's account to the accounts of the individual donors to reimburse them in full for the checks they had written. D. Delivery and receipt of contribution. Reports to GAO. Solomonson picked up the contribution from Loeb on May 12th and delivered it to Thatcher in Washington, D.C. Upon opening the package, Thatcher found the checks and the $2,000 in cash. Thatcher thought it was completely reasonable that Loeb had raised these funds by soliciting other persons. The $2,000 in cash was given to Joseph Cole to open a new account in California. The checks were given to staff for routine handling. On May 24, 1972, the Humphrey committees filed a report of receipts and expenditures to the General Accounting Office as a required pre-California primary report. The $48,000 contributions by check were listed in the report, but not the cash. Curiosity of the news media was aroused because of bank addresses shown for the donors, and GAO initiated inquiries. Loeb spoke with counsel on May 31st and was advised of the provisions of the new law. On June 1st, Mr. and Mrs. Loeb wrote to each of the recipient committees to advise them that they were the true donors. The next day, Thatcher filed an amended report with GAO to reflect the Loebs as the true donors, each in the amount of $24,000. The $2,000 contribution of cash was not reported to GAO until June 10, 1972. E. Thatcher's 1973 conversation with Humphrey. Thatcher has stated that sometime in 1973 he met Senator Humphrey on an airplane and told the senator he was concerned and upset because Loeb's lawyers were advising Loeb to fight the charges when they knew there was a clear case against him. Senator Humphrey was concerned because Loeb was a friend of his and was having difficulty due to a contribution to the senator. Thatcher does not know whether Senator Humphrey took any action after hearing Thatcher's view that Loeb should plead guilty. F. Loeb's prosecution. Loeb was prosecuted for violations of the election law which went into effect on April 7, 1972, which makes it a crime to make a contribution in the name of another person. On May 31, 1973, he entered a plea of nolo contendere to violations of Section 440, Title II, United States Code, and was fined $1,000 on each of 3 counts. He stated to the court that he had no knowledge of the enactment of the new law. G. Status of the matter. The Federal Election Campaign Act of 1971 made it mandatory for every political committee to report the name of every contributor of more than $100, and made it unlawful to knowingly receive a contribution made by one person in the name of another. Loeb's attorneys averred in court that Senator Humphrey suggested Loeb speak with Chestnut with respect to the mechanics of the contribution, and that when Loeb agreed to give $50,000, no one called the existence of the new law to Mr. Loeb's attention or raised any question as to the procedure. Chestnut spoke with Loeb. The next day, Chestnut called Loeb's secretary to furnish the names of committees which would receive the donations and discussed with the secretary the sums to be given by contributors. The question may arise whether it would be reasonable for Chestnut to expect Loeb to accumulate the grand total of $50,000 from so many donors in just one day. When called to testify under oath, Chestnut invoked the Fifth Amendment and Senator Humphrey's office has not complied with a committee request for records relating to Loeb. End of Section 4.
Section 5 of the Watergate Report, Volume 3. This is a LibriVox recording. All LibriVox recordings are in the public domain. For more information, or to volunteer, please visit LibriVox.org. Final Report of the Senate Select Committee on Presidential Campaign Activities, Volume 3. Chapter 7. The 1972 Presidential Campaign of Congressman Wilbur D. Mills, Part 1. Financial Elements. Preface. Congressman Wilbur D. Mills formally became a candidate for the presidency on February 11, 1972. Efforts on his behalf had begun in early 1971. A committee entitled Draft Mills for President was constituted in the summer of 1971 by Mr. Charles Ward, an Arkansas businessman. Ward had conceived of the idea of a draft, spoke with Mills about it in June of 1971 to ensure that he had no objection, and in July opened a campaign office in Washington, D.C. To permit contributions of larger amounts to be subdivided, Ward also served as chairman for committees named Good Government and Sound Economic Growth. He served the draft campaign actively until February of 1972, at which time the official structure of the Mills campaign was created. According to Ward, Draft Mills had receipts of about $200,000 from July of 1971 to February of 1972. About 75 persons gave $1,000 or more. Only a few donated more than $3,000. The General Accounting Office records show that post-April 7, 1972 receipts were about $293,000. This report reviews Congressman Mills's support of legislation favorable to dairy producers and dairy trust contributions to his campaign. It also reviews monetary contributions and other benefits of substantial value to the Mills campaign from corporate assets of Associated Milk Producers Incorporated, Mid-America Dairymen Incorporated, Gulf Oil Corporation, and Minnesota Mining and Manufacturing Company. The Select Committee made an effort to schedule an interview with Congressman Mills. Letters were sent to him by Chairman Ervin on January 24th and on February 7th, 1974. Senator Ervin stated, "We feel it necessary to speak to you, and we hope that you, at your convenience, can find time in your busy schedule to meet with a member of the committee." No written reply was received, but on March 18, 1974, the attorney for Congressman Mills orally advised committee counsel that Congressman Mills would meet with a committee senator immediately after House action on certain legislation. Congressman Mills's counsel said Senator Ervin would be notified of this by letter. However, no such communication has been received. On a television appearance, NPACT on April 1, 1974, Congressman Mills stated that he was unaware of what was going on in the so-called Draft Mills. In April of 1972, Mr. Joseph Johnson became chairman of Mills for President. This became the principal campaign committee. During February and March of 1972, Johnson did campaign work while on the congressional payroll of Congressman Mills, and for the preceding 6 months, Johnson had worked in the Draft Mills project while salaried by Associated Milk Producers Incorporated, AMPI. When called to testify under oath on April 2, 1974, Johnson invoked the Fifth Amendment privilege as one reason for refusing to answer any questions concerning the 1972 presidential campaign of Mills. Senator Talmadge, who chaired the committee session, sustained Johnson's refusal to testify on the basis of his privilege against self-incrimination. Prior to April 7, 1972, the federal law was ambiguous concerning the necessity for presidential candidates to file reports of receipts and disbursements during the primary election period. Nevertheless, many candidates made voluntary disclosures of the identities of their contributors. Congressman Mills made no voluntary disclosure for the period preceding April 7, 1972. Thus, very little is publicly known concerning the identities of Mills' supporters before April 7th. The Federal Corrupt Practices Act of 1925 made it unlawful for any corporation to make a contribution or expenditure in connection with any election to any political office, or for any candidate, political committee, or other person to receive any such contribution. Title 18, Section 610. In addition to this prohibition, it is unlawful to purchase articles of any description, the proceeds of which inure to the benefit of a political candidate or committee. Title 18, Section 608B. Because of staffing and time limitations, the investigation of the Mills campaign was not exhaustive. 1. Contributions from Associated Milk Producers, Incorporated. Introduction. A corporation which gave a large measure of support to Congressman Mills's presidential campaign in 1971 and 72 was Associated Milk Producers, Incorporated, AMPI. It consists of approximately 40,000 dairy producer members in the southwestern, central, and upper Midwestern states. Its headquarters are located in San Antonio, Texas. Because federal statutes have forbidden the use of corporate assets for political contributions, in 1969 AMPI established a trust to collect monies from participant donors, almost entirely dairy farmer members and AMPI employees, and to make political contributions. This trust was named the Trust for Agricultural Political Education, TAPE, TAPE. In 1972, it was succeeded by C-TAPE. In addition to contributions of $55,600 from TAPE and C-TAPE and two other dairy trusts, there is evidence that Congressman Mills's presidential campaign received the benefit of up to $75,000 from corporate assets of AMPI, $15,000 from corporate assets of another dairy cooperative, Mid-America Dairymen Incorporated, and $40,000 in donations from members, employees, and officers of AMPI, for a grand total of about $185,000 from dairy producer sources. This is the equivalent of about 38% of his campaign revenues. The benefit which the Mills campaign received from AMPI corporate assets came in the form of cash, checks, goods, and services. This section of the report sets forth the supporting details. AMPI records, some of which might have been relevant to the topics of this report, were destroyed in March and April of 1971. According to Tom Townsend, an AMPI official, after a private antitrust suit had been filed against AMPI, he was instructed by David Parr, assistant to the AMPI general manager, to destroy records in the Little Rock, Arkansas office of AMPI relating, among other things, to political activities or contributions. B. Contributions by political action committees. Mills's support of legislation favorable to dairy producers. 1. Summary. The Mills presidential campaign received $55,600 from the trust funds of TAPE, C-TAPE, ADEPT, and SPACE. Of this total, TAPE and C-TAPE, the adjuncts of Associated Milk Producers Incorporated, gave $26,500. While Congressman Mills did not sponsor any milk price support legislation in March of 1971, he was of assistance to AMPI and its organized effort to pressure the Nixon administration to grant an increase in the level of support for the price of milk. He had numerous meetings with dairy producers and their lobbyists, arranged a dairymen's meeting with the Speaker of the House, suggested congressmen to be contacted as co-sponsors of legislation, and urged key officials of the Nixon administration to take action. 2. Background. The milk marketing year begins on April 1st. Each year before April 1st, the Secretary of Agriculture has a statutory obligation to fix the level at which the government will maintain the price of milk. On March 12, 1971, the Secretary announced a price support level of $4.66 per hundredweight, about 80% of parity. The dairy producers had been lobbying in the Congress and in the Department of Agriculture in order to obtain a support level of at least 85% of parity. When the March 12th decision became known, the dairy producers marshaled their efforts in an attempt to obtain a statutory increase. They focused their attention on Capitol Hill, urging congressmen and senators to sponsor favorable legislation for a twofold purpose. They conceived that a wellspring of legislative support could persuade the administration to reverse its position, or, failing that, such legislation might eventually be enacted. On March 25, 1971, the Secretary of Agriculture announced an increase in the level of support to $4.93 per hundredweight, about 85% of parity. This committee has investigated the relationship between milk producer contribution to the president's campaign and the milk price support increase announced on March 25, 1971. The question at issue is whether or not the increase was granted in return for or in anticipation of contributions. A white paper issued by the White House on January 8, 1974, argued that intense congressional pressure, in addition to the economic merits and political considerations, was a factor in the president's decision. 3. Support from Mills. The dairymen looked upon Congressman Mills as a foundation stone in their project in Congress. He had been a consistent supporter of legislation beneficial to farm and dairy groups. Bob Lilly, assistant to the AMPI general manager, testified that Mills was a significant and important person to have on their side in getting a price support increase. Mills declared his position and suggested other congressmen who should be contacted to become co-sponsors of legislation. Lilly said they were successful in inducing a number of congressmen to urge the executive branch to declare an increase. Dr. George Mirren, who became AMPI general manager in 1972, and who previously was an AMPI consultant, testified that AMPI worked with Mills for the dissemination of data to other congressmen and to assess the chances of enactment of favorable legislation. Mirren's calendar shows he met with Mills on March 16, 1971. Mirren testified as follows. Sanders, with respect to the March 1971 price support decision, could you elaborate for me on your work in generating support on Capitol Hill? Mirren, it was a very limited activity. I would say that I talked to maybe 5 or 6 people. I think I talked with Wilbur Mills repeatedly. I talked with Senator Humphrey on occasion. In February 1971, officials of the Department of Agriculture and White House liaison were called to Speaker Albert's office to meet with the Speaker, Congressman Mills, and dairy producers. Mirren said this was initiated by Mills. The purpose was to communicate to the Secretary of Agriculture and to congressional liaison of the Republican administration the importance of the requested price adjustment. Tom Townsend, an AMPI employee working under the supervision of David Parr, an AMPI official, said he, Townsend, personally contacted congressmen to urge action on a price increase, and he had conversations on the matter with Congressman Mills. Townsend was present at the Albert Mills meeting. Of it, he said, Chairman Mills and the Speaker got together and asked somebody from the White House, a liaison man, to come up at a meeting in Speaker Albert's office. Sanders, what, if anything, did Chairman Mills and Speaker Albert represent to AMPI that they were personally willing to do for the dairymen? Townsend, Well, I think, lend support to the bills that were being introduced. He, Mills, would try to be helpful in terms of advising the administration and other members of Congress to generate support. The question was put to Mr. Harold Nelson, AMPI General Manager, until January 1972. Now, you mentioned contact with various congressional leaders was also part of the strategy in early 1971 to obtain a milk price support increase. With whom did you meet? Nelson testified, I met with Wilbur Mills, and as I recall, and this can be wrong, I may have met with Chairman Pogue. Congressman Mills's attorney advised committee counsel that Congressman Mills has had frequent meetings with David Parr of AMPI. Congressman Mills was asked to furnish logs and calendars for the February and March 1971 period. His attorney stated that such documents have not been maintained. In his April 1, 1974 television appearance on NPACT, Congressman Mills was asked by the moderator about the willingness of the milk industry to contribute so substantially to his presidential campaign. He responded, I did talk to George Shultz generally about it, price increase. I met in the Speaker's office one time with Clark McGregor when he was in the White House. But the Speaker and I didn't do the talking. The people that we had asked Clark to come in here did the talking, namely the dairy farmers themselves. Congressman Mills's attorney also advised that Mills had one conversation with Connally about the milk increase, the purpose of which was to make sure the president was aware of the facts. In testimony given to the Select Committee, John Connally said he had a number of conversations with Mills between March 12 and March 25, 1971, about the milk legislation. I do know that Chairman Mills talked to me about it several times. According to the White House White Paper, the records of Clark McGregor, presidential counsel, show that Congressman Mills urged him on at least 6 occasions in February and March of 1971 to urge the president to raise the support price. McGregor has described the contacts to the Select Committee staff as vigorous lobbying. Congressman Mills telephoned George Shultz, then director of the Office of Management and Budget, on March 4, 1971, to push for a prompt decision. Mr. Shultz's telephone log also shows he was called by Chairman Mills on March 8. 4. Dairy Trust contributions to Mills. There is evidence that the Mills presidential campaign received up to $75,000 in money, goods, and services from AMPI corporate assets, in addition to $55,600 received from the Dairy Trust established to make legal political contributions. Those sections of the report which follow will provide details concerning contributions to Mills's campaign from corporate assets of AMPI as well as other corporations. Mills received $1,500 from TAPE in 1971 and $25,000 from C-Tape on June 13, 1972. Adept gave the Mills campaign a total of $16,600 in June, July, and August 1972, and Space gave a total of $12,500 in May, June, and August of 1972. Dr. Meren was asked if the backing of Mills for the 1971 milk price support was a factor in deciding upon subsequent contributions to him. He said, I think in complete honesty it would be a factor or an incident in a long history of understanding, awareness, accessibility, and support. Concerning the C-Tape donation of $25,000 to the Mills campaign, Meren testified, Mr. Mills knew I gave it to him and he thanked me for it. 5. Completion of investigation. This limited investigation has not uncovered any direct evidence that Congressman Mills's support of the March 1971 dairy legislation constituted a specific quid pro quo for the money, goods, and services given to him. The failure of Congressman Mills to make himself available for a committee interview his campaign manager's invocation of the Fifth Amendment when called to testify under oath, and the destruction of records by AMPI have prevented a full development of the facts. C. Cash from corporate assets of Associated Milk Producers, Incorporated. 1. Summary. In August of 1971, on the instruction of Harold Nelson, general manager of AMPI, Bob Lilly, an assistant to Nelson, delivered $5,000 cash to David Parr, also of AMPI. There is evidence that Parr sent the money to Washington, where it was delivered to Mr. Oscar E. Gene Goss, administrative assistant to Congressman Wilbur Mills. Lilly acquired the cash by borrowing from a bank and then repaying the loan with funds received from AMPI attorneys who obtained reimbursement by billing AMPI for services not rendered. In November of 1971, Jake Jacobson, AMPI attorney, gave $5,000 cash to Parr for Congressman Mills. Parr had asked Jacobson for this money, saying it was needed for Mills's presidential campaign. Jacobson obtained the cash by a withdrawal from his law firm account. Jacobson is one of the attorneys who, according to Lilly, obtained reimbursement from AMPI for monies he made available for political contributions. Jacobson denies this. Parr cannot recall the disposition of the $5,000 he received from Jacobson. 2. $5,000 in August 1971. On August 17, 1971, Harold Nelson, AMPI general manager, instructed Bob Lilly, his assistant, to deliver $5,000 cash to David Parr, also of AMPI, for Wilbur Mills. On the same day, Lilly obtained the money by borrowing $10,000 at the Citizens National Bank of Austin, Texas. According to Lilly, Nelson told Lilly he could repay the loan by aggregating funds from AMPI attorneys on retainer, and the attorney, in turn, would bill AMPI double out of what would have been contributed and would be paid in that manner. Nelson testified that he has no recollection of telling Lilly in August of 1971 to give $5,000 to Parr for Mills, but stated, "If Lilly said that I did it, I am perfectly willing to accept the fact that I did." Parr testified that he asked Nelson to send $5,000 to Little Rock for a Mills appreciation dinner in August of 1971. Parr denied that he received any request for this money from anyone working for Mills. Lilly delivered the cash to Parr's secretary, Norma Kirk, at the Little Rock Airport on August 17, 1971, and Kirk returned it to Parr's office, where it was placed in a walk-in vault. Parr testified that at his direction, one of his employees, Tom Townsend, took the $5,000 to Washington, D.C., to be given to Gene Goss, administrative assistant to Wilbur Mills. Parr said that tape funds were not used because publicity was not desired. Townsend testified that in possibly August of 1971, on Parr's instruction, he carried a sealed envelope from Little Rock to Washington, D.C., where he delivered it to Goss in Mills's congressional office. Parr told Townsend that the envelope contained cash and checks, somewhat less than $5,000. Townsend recalled what Parr had said to him. "I've got some contributions that I would like to have you take up to Washington. Now be careful, because some of it is cash, some cash and some checks, and it's less than $5,000. Townsend told Goss the envelope was from Parr. Goss has no recollection of having received this cash. He does remember receiving checks, not more than 100 in all, which Parr sent to the campaign. These checks were written by dairy farmers and other persons associated with AMPI and will be explained more fully in Section F. Lilly held one half of the $10,000 loan in reserve and used it to repay the loan along with funds obtained from Stuart Russell, an AMPI attorney. Lilly testified that Russell was the only one he contacted for this purpose. In 1971, Russell disbursed $39,500 to Lilly, for which he obtained reimbursements by billing AMPI $62,950. A Russell check for $4,000 on October 5, 1971 was payable to cash, the proceeds of which were used by Lilly in paying the $10,000 loan in full on October 8, 1971. 3. $5,000 in November 1971. On November 10, 1971, Lilly went to Austin, Texas to see Jacobson. At the Austin airport, he unintentionally met Jacobson, Parr, and Townsend. It appeared they were there for reasons other than to meet Lilly. Lilly observed an envelope being handed to Jacobson by Joe Long, Jacobson's law partner. Lilly heard Long say, "Here's the $5,000 for Wilbur that you wanted." Jacobson, Lilly said, handed the envelope to Parr with a similar remark, "Here's the $5,000 for Mr. Mills," and Lilly observed Parr put the envelope in Parr's pocket. Jacobson testified that Parr telephoned him to say, "Mr. Mills needs $5,000 in his presidential campaign." At a different point, Jacobson testified, he, Parr, asked for it, and he wanted it for Mr. Mills. Jacobson withdrew $5,000 from his law firm account. He testified, "I delivered $5,000 to David Parr for Wilbur Mills in the Austin airport." Jacobson was unable to say whether his check for $2,750 on November 10, 1971, drawn on the firm of Jacobson and Long, and the check for $2,250 written by Long on November 10, 1971, also drawn on the Jacobson and Long account, were specifically the source of that $5,000 cash which he gave to Parr on the same date. He averred that he did not bill AMPI for reimbursement. Lilly has testified that other monies he received from Jacobson for political uses were recouped by Jacobson from AMPI, and the committee's Milk Fund report presents independent evidence corroborating Lilly's account. For the 12-month period ending June 30, 1972, the Jacobson law firms in Austin, Texas and Washington, D.C. received fees from AMPI totaling $80,000. Parr had great difficulty remembering the circumstances of this transaction. He said it was confused in his mind with the $5,000 which Lilly delivered to Little Rock in August of 1971, but he said he thinks he did ask Nelson about this money. He recalls receiving $5,000 from Jacobson in the Austin airport. He recalls that it was for a political contribution, but he cannot remember if it was for Mills. He acknowledged that the $5,000 was in the form of cash, but he does not know the source of it. Nelson testified that he has no recollection of authorizing any payments to Mills. End of section 5. Recording by Maria Casper.